Hey everybody, Trendy John here from Simpler Trading. Let's go ahead and start this week's broad market analysis. Before we do that, go ahead and hit that like button. We're going to go through several different charts here. We're going to talk about several different things. We'll try to make it short. And that way, you'll have this and you can go on and enjoy your beautiful Sunday. And I'll see you guys 30 minutes before the bell opens. So, again, go ahead and hit the like button. Let's get started here with this week's U.S. economic calendar. Remember, all of this information here is just a catalyst that pushes price to supply or demand. In this case, we've been heading down, I think, for like 4 or 5 weeks. So after we hit that supply zone, it just seems like we're getting these mediocre bounces, which are, typically pushing up to smaller time frame supply zones or EMAs or some sort of fib, and then we're selling off, right? But this stuff is important. It will create volatility in the market. So this is why I like to go over it. So starting tomorrow, these are Eastern time, 9:45, we have Chicago Business Barometer, PMI. Tuesday, April Fools. I hope you guys have some sort of April Fools in mind. Try to trick your neighbors or your friends or your spouse. It could be fun. I always try to come up with something really funny, but we'll see. Maybe the April Fools is on us, thinking that the market might bounce. I don't know. Anyways, April the 1st, Richmond Fed President Thomas Barkin speaks. S&P final U.S. manufacturing PMI, ISM manufacturing job openings, auto sales. Wednesday the 2nd, ADP employment, factory orders. Fed Governor Adriana Kugler speaks. And then on Thursday we have initial jobless claims coming in at 8:30. Some more PMI, and then we have some Fed heads speaking down here towards the afternoon. And then on Friday we have the U.S. employment report rate, hourly wages, and then we also get to hear from Jerome. Jerome's going to come in and maybe save the market. I guess we'll find out. I doubt it though. Anyways, this is what's going on for this week. And the next thing that I want to be looking at, which is there's not much going on. We're getting ready to approach earnings season again. And big deal, the quarterly candle closes tomorrow. So I'm really excited about that. We'll go over that here in a few minutes. As far as earnings are considered, there's just not much going on this week. Matter of fact, I don't have any skin in the game. The only thing that I would maybe be interested in, perhaps trading, would be RH. And then on Thursday in the room, guys, I have my next class. I'll be teaching you, I believe it's this week, teaching you how to trade into earnings by using supply and demand and showing you how to do that with confidence and consistency. Okay. Moving on, let's go ahead and get over here into our charts. So we want to get into the quarterly chart. This is where the big picture is. I love to use this to keep my side, keep me on the right side in my portfolio for long term. Smaller time frames are also very important, but I want to go over this first. So I'm going to give you a couple notes. They're really easy, straight to the point. We're closing in on the close of the quarter. You guys can see here we only have 1 day and 2 hours until this candle closes. The 550 zone held very nicely 3 weeks ago. I'll show you that here in a second on Thinkorswim. And this past week looks like price may want to revisit that zone again. Structure wise, we went from an inside and up formation to an inside and down all within the same week. So you had an opportunity to make money there to the upside and opportunities, to jump in puts and make money to the downside. Kind of give you that really nice volatile range expansion that we did see. And if you didn't take advantage of it, I still think we're going to see a lot of volatility. So it should be fun this week. All right. This is the third week in a row that price has closed under the trendy cloud. And I'm going to show you that here in a second, which is kind of a big deal. Also, take note that the candles went from white to red on the weekly. All right. So we come over here. Let's go ahead and take a look at SPY. And here we are right here. And let's go over the major levels. Okay, so my two major levels for SPY are going to be 564 this week. which is going to be resistance until proven otherwise. And then we have this demand zone that I was talking about. This worked really well 3 weeks ago. We had a really good time. I talked a lot last week about the possible rounding bottom, and believe it or not, unless we take out this candle, we could still have a rounding bottom. Now, this is not my favorite looking rounding bottom, that's for sure. I would have liked us to continue holding above this 23.6, but market doesn't always do what I want it to do. You'll notice that we have this nice little zone over here. Found this on a little bit smaller time frame. Like I said, it worked really well, but underneath that, just in case uh, buyers do not show up here and we continue to see moves to the downside, it is possible that we could see all the way down towards 537, and then underneath that, you know, just basically 530 to 500. Kind of a bummer, you know. I definitely expected this. Um, I didn't think that it was going to be such a slow move, with a little bit of volatility, like on Friday, right? But it has been pretty slow, which is really just kind of creating a lot of hesitation, I think, with traders, probably creating bad habits, maybe. Maybe you're not being patient enough, you know. Um, During these times, a lot of folks like to kind of sit on their hands and just kind of feel things out. To me, what that means is like they get more involved in the news and they start trying to figure out what's going on. But let's just remind ourselves to concentrate on price action. Okay. And I said earlier that we went from white to red, and that also we are 3 weeks now underneath this cloud. And when we go back and we keep going back, we'll notice that the cloud worked really, really well for a long time. And actually, the last time that we closed underneath the cloud was back here in October of 2023. All right, so it's been a long time. You'll notice that when we were underneath the cloud, we only stayed under here for about 2.5 weeks or so, and then we popped back above there, and things were beautiful. All right, and that was coming off of, honestly, a lot of what this looks like right now is what we're looking at here. Nice slow little moves, little rounding. We call this the H pattern, by the way. So lowercase h comes back up there. We call this a hopium pattern because I hope that the market's going to go up, but it just keeps going down. And so this cloud is going to be resistance until it's not. So the better idea or the better way to come into the market is say, hey, listen, as long as we're staying underneath these levels, we can see a lot of volatility back to the upside. But just remember when we get up here that this is a really strong area where you can be looking to go short again. Okay. Where do we want to go long? Well, we're always, as supply and demand traders, trying to trade demand zones when we get there. And, for example, not all zones are going to work. A lot like Friday, right? So Friday's zone worked for a little bit, but it just kept dipping and dipping. So the selling was really uh, accelerating. But here's my thing is that I will continue to buy zones because it shows when you look back and historically looking since the inception of the market, at some point, we're going to find a really nice zone that's going to make us a lot of money. And overall, the markets are really bullish, right? Not right now, but the bigger picture is that the market's super bullish, and I want to be making most of my money once we get back over that cloud and we start to trend again. But the question that we all have, which zone's going to work? You don't know, and that's my thing is I don't want to be a captain obvious. You know what I mean? So I don't want to do any of this hindsight trading when the market does bounce and say hypothetically it does something like this. I want to be the guy that took action. But disclaimer, I'm taking action using smaller allocation that can still make me good money, but I'm not full porting the idea that I have to call the bottom. So just please understand that. I sent out a tweet on Friday, showed my portfolio, gave you guys an idea of like what my account looked like when it was down. And you guys can see, overall it was down 2%, which was about 5 grand or so. Now, also, that's not really my day trading, if that makes sense. So most of that is unrealized, right? Because I come in, I'll trade SPX, I close it out, I open them, and I try my best to be a good day trader. But I understand that in the long term, adding into long term trades, you take a little bit of pressure, take a little bit of heat when stuff like this is happening. But for myself, and I want to be careful because if this turns into a much bigger move to the downside, then that temporary pain that I'm going to feel, I still have to live with that, and it's not like it's like easy. I don't think that trading's ever easy. Even when we're making money, it's never enough, right? So there's always this battle whether the market's going up or down. But I just want to be, transparent with you guys and help you understand that I'm not full porting this. You'll know by my quantity, my size, or if you just ask me, how much money I'm putting into something. I'm always open to letting you guys know that. But I just want to make that clear in case the market keeps dipping. All right. Notice on here when we went back to October of 23, then we'd have to go all the way back here and find it again, which is March. Okay. And so March, and even here, February, and this is a long time ago, guys. So this is 2023, so good 2 years ago. Februarys are just not fun, into March. It's just not a good time most of the time, unless you just love to short and that's all you're doing, right? But I can't guarantee that every February is not going to work and that we're going to break down. So when we do break down, I'm still trying to buy demand zones, right? So, I wish I could just say, hey, every February, market's going straight down. I'm just going to buy puts and walk away for a month or two, but I'm a trader, so I still get in here. And as we go back, we'll notice that when prices are underneath the cloud, things can get really ugly. So, for example, look back here. Once we break down, it just really accelerates to the downside. And right in here, 2022, we got that. And really, a lot of this in here was pretty ugly. And you'll notice something when we're looking at this is that we came into the lower trendy edges. Okay. And this was back in 2022. And notice up here, I've been saying this entire time, and I said this before on, my projection for 2025 is I did not like how extended we were on the quarterly and monthly candles. So what does that mean? Well, from a supply perspective, this was our level here. And once we broke under this, I said sideways to down, and we'll try to buy dips at lower zones. Well, that's exactly what's happening. And when we look at the zones, okay, or we look at the trendy edges, you'll notice that this is the lower portion, which is your demand zone that's identified by the trendy edge. So we have these other ones that I'm manually finding, but this is the trendy edge that's identifying the bigger level. Okay. So I had a March 2025 hedge here. A little frustrating because I feel like a lot of people, timing is always the variable. But like I found everything that you would need to find and I put it into a video. I created it. I bought hedges in October. I really feel like I was right here. Unfortunately, March has run out. And so, they worked a little bit and I sold some of them and then I held some and they didn't work out. And now you can see that, 500 doesn't actually look that far away. when you look at the points. Okay. Now we'll get to some bigger charts here in a few minutes, and I'll go over some more stuff with you. But I just want you to be aware these are all like this one worked really well, but since it's been tested, we could break right through it and get, further down here towards the 530 level. But just understand from a trendy edge perspective, there are times when we actually break down under that top edge, and then we go all the way to the lower edge. All right, we kind of reset. And I don't want to get into why you think the market's going down or politics or anything like that, but from a price perspective, we want to be looking at buying these lower levels. We obviously, I do want to be trying, to trade other zones, just like here, and you get the little pop. But as long as we stay under this top edge, it is sideways to down with relief bounces from other zones. Big picture, this does not start looking good this year until we get back above this level or next year or in one of these zones. So we're trying to play relief bounces into lower time frame supply or EMAs or some fibs, and I'll show you all that stuff. Every morning we wake up, I go over this stuff, but just know that. All right. But also note that your fear and greed is super high right now. A lot of people are very scared. Um, and we're right at that juncture where I feel like when I hear other people analyzing, they kind of sound like I do. We're either gonna drop or go up, right? It's very profound, if you will. But the truth of the matter is, right? It's hard here. And if you don't want to sit on your hands, you kind of have, I'm channeling Mark Douglas here. It's kind of like a 50-50, and you just got to know how to manage your trades. You know, I don't have, we're not in an area where we have an edge. So, what I mean by that is that we're not at the demand zone, at least on this weekly time frame. All right. We're not at the zone. So, we need to be patient. Okay. We're at some smaller zones, and I'll show you that here a little bit later. And we could get a relief bounce because everybody's like bearish. All of a sudden, everyone's bearish. And all of a sudden, people's indicators are saying, hey, we should go short. I'm not saying they're wrong at all, but we have been down 1, 2, 3, 4, 5 out of 6 weeks. Okay. I mean, this is a really big sell off that just keeps happening. And it's hard for me sometimes to buy puts, when things have been so bullish on price action. I have to try to take, a couple trades to the upside, or I slowly start to add into like my leap type trades. And by the way, I'm close to getting into my second tier of adding into my leap trades. And this is the part, Melissa and I were speaking on Friday, is that, you know, I want to make sure everybody remembers my leap trades were put on with the idea that I would be adding during this time. So please, please don't forget that. And please know, like I was saying earlier, I've only just initiated these. Okay, so they're not big. They're smaller positions, couple grand each. But I'm not even added where I want to be. So let's say that each one of these needs to be 10 grand for me. You know, I'm probably not even a quarter there, or some of them I might be a quarter there. But I love the idea of buying lower when things are cheaper. Okay. So sorry about that. Kind of got off, and talking a lot about that, but I really want you guys to see that it's not actually normal that the SPY sits underneath here. It's normal that we get bounces at structure. So, are we coming into an area that we need to be super bearish on? We'll find out. All right. But it's not normal that we sit underneath the cloud for very long. All right. A couple weeks maybe. And then we get nice pops. You can see we stayed under here for quite some time. And if we're looking at this, then we'll just be more patient and just get yourself some puts. All right. Now, when I think about puts, I'm thinking like, deeper in the money, selling credit on SPX, that type of stuff. Okay. And we'll talk more about that in the room. All right. So moving on, we're going to get into now, we're going to get into the Qs. All right. And we'll go over that and we'll look at the quarterly. And I promise I won't talk as long on this. So when I take a look over here, again, the quarterly candles on both these, the SPY and the Q, close, which I'm really excited about. This is not a beautiful candle by any means, but listen, every once in a while, stuff like this has to happen. And my big thing was the quarterly. I've been saying this forever. The quarterly 9 EMA. We were just too extended from it. We were underneath the trendy edge. And the idea is that price is going to come back and meet with this 9 EMA at some point. It's not if, it's when. And when we look back at this, talking about the weekly, I mean, it's been absolutely a long time since we've closed under one of these. So I don't see that happening, but man, if it does, that would be absolutely ugly. We'd be back down here in the 200s. You know what I mean? Anything's possible, but we haven't been under the cloud just so that everybody understands that this cloud has been working for many, many, many years. We haven't been under there since 2009. Okay. And you guys can see we're getting closer to it. It's interesting because we have earnings around the corner. Banks will start ramping up, and that's when things get exciting. And my thing is, are we going to, if we flush, like capitulate, I think we come to this 9 EMA, and I think this is where things start to look interesting. Okay. So, from a big picture standpoint, ugly candle, but look, they need to happen sometimes. The quarter candle was almost closed, and so far it's ugly. The weekly looked good until it didn't. We went from an inside and up to an inside and down. Price stalled at the 618. The two major levels are 468 by 452. So let me bring you over here, guys, into the Qs. And these are your two major levels. All I'm using is a Fibonacci's and a zone. So typically, this is a major level too. So if we get a bounce from the 618, then 482 is going to be that major level as well to the upside. But if we say we gap down tonight in the futures, now we're underneath the 618. And that number, 85% probability that we hit that 88.7. That's at 436, guys. So you can see that can get really ugly this week if that happens. Your next level to the downside is 452. That would be your next major level, right around this demand zone. Now, this demand zone, take this off for a second. Let's zoom in here. Understand, after the move out, we actually came back and tested it twice already. Okay, so this is not a fresh zone. And this zone right here, you got your drop, base, rally. This has been tested as well. All right. Anything under here, pretty scary, pretty ugly, and definitely different than what we're used to. Okay. So getting back and thinking about the quarterly candle, the quarterly EMA, if we were to get down there, this is saying, so I got a lower edge here at 412. And if I come back over here to the quarterly, and I just kind of hover right above there. This is around 430 something. So 430, we touched that 9 EMA. Now, what about my charts? Where is 430 something? Well, it's deeper inside this zone. And again, we've tested this zone. So if I come down here and I use my quadrants and I measure from here to here, you can see that 437 pretty much lines up to 50% of the zone, which would make sense because we've already tested it and perhaps we need a little bit more price discovery. So you come about right here, and this could serve as a really nice bounce opportunity. And when you go across here, you can also see that it's lined up with this zone that's only been tested once. So 430 to 437, it sucks, but if we get there in a hurry, could serve as a really good place to try and buy the dip on the Qs. Now, notice that we stopped. Control Z. Well, I'm just going to go ahead and put this in here, right there. Notice that we stopped at the 618 and basically the trendy edge. We've tested this already. It worked really well a couple weeks ago. That was fun. Okay. So there's an opportunity for a relief bounce. Who knows? I haven't been paying attention to X or the sentiment. I just got back from Tallahassee, going to FSU to hang out with my daughter. Had an amazing time. So this is the first time I'm looking at these charts with you guys, since last week. Okay. Anyways, those are the major levels that I'm looking at far as the Qs go. The SPY, now let's go ahead and move on. And we're going to take a look over here at the dollar. Won't spend much time over here on this. It's going to be DXY. And we're going to go to a weekly, just like that. Notice that the dollar started sort of breaking down just a little bit. But from a weekly standpoint, it's actually bullish. It came into a demand zone. It popped, market pulled back. And then here it was down about 26 cents or so, looks like on Friday. All right. But that was after it popped really strong. Okay. So we're in a demand zone. My major levels for the dollar remain the same 101.5 and 1075. Everything between is just a little bit of volatility. Those are my two major levels. Okay. Let's go ahead and move on. We're going to go into the TNX, or your 10-year Treasury. And how it relates, again, the yield on the 10-year Treasury is a key indicator of market expectations for interest rates, economic conditions, so forth. All right. Um, the zones are working really well. You guys can see that. And technically, for me, I see this moving back down towards 3.8, perhaps into June, July. For now, though, caution is warranted in the overall market. If we do start seeing uh, prices, or the TNX, over the cloud, all right, or above 5. But it's kind of like the dollar for me. Trying not to put too much focus here unless we get here, or if we take out that 5, okay, up here around 5. Okay. Moving on, looking at the skew. You guys know, you probably heard me a million times talk about this because I talk about the same things when we do the broad market analysis. Notice, okay, we're on a weekly. I told you guys, for as I'm concerned, 5 to 10 days out on calls, that worked really well if you took that opportunity. The market did go up, and then it came crashing down on Friday. All right, so Monday was really fun. Monday did trap me, on very small positions, but I sold out my SPY calls and left one to see what would happen, see if we could continue, because I'm a bull at heart. And there was reason to believe that we could continue, but I'm going to show you here in a second why I should have just listened to my chart. But yeah, so those calls were doing really, really well, and I let this one go to zero. It didn't work out, but that's okay. All right. But far as the skew is concerned, guys, not 2 weeks have closed under this in almost 2 years, I think. And if it does, we have a whole different look in the market. It's about to get super ugly. You're going to be super scared. People are going to be pissed off. It's a height motion time if that happens, because if we get down here, like I'm used to from the old days, this is where pure panic is. Okay, and this is crazy to me. I feel like there's pure panic out there right now, and we're still chilling up here. It is the weirdest thing. So just imagine if the skew comes down to here, the fear and greed right now is sitting at 22. I mean, this thing's going to be down here towards 1, man. Basically, it's going to be crickets out there. Okay. So, anyways, let's move on. But before I do that, with the skew, okay, we use this, and one might consider buying protective options or reducing risk exposure, basically. Okay, and a low skew might indicate complacency in the market or lower perceived risk, prompting different strategies. All right, now I use it, okay, as a tool for gauging market sentiment and potential risk. It's just one of my many indicators that go with the broad market analysis. And when I look at the dollar and the TNX, it's pretty neutral as far as I'm concerned. When I look at the market so far, SPY and QQQ, okay, and I look at the extreme fear here, we came into an area again on Friday. We didn't take out lows of 3 weeks ago. We actually were on a higher low. Okay, so it's not until we take that low out that things look bad. So if I were in charge of the market, I'd actually look to bounce the market and then sell off the market into those resistance. So my overall sentiment is I'm neutral. I don't want to be like extremely bearish or anything like that, but I'm just neutral. All right, and we'll go over some of these charts here in a second as well, so I can show you where you could get or think about getting short or long. Okay. So as we move on, we know that most participants in the market are on the put side. And when the majority of participants jump on the put side, typically the market likes to rip. Um, and when, most people are on the call side, that's when they pull the rug. So we've been sitting here, folks, in this extreme fear, I feel like almost 2 months. Like it's barely come over to fear, maybe close to neutral. Um, it's been a drawdown, for a while now. So, anyways, to me, it's a good time for the market to pop, but there's extreme negative sentiment out there, and the market's been frothy for a while. So, let's move on. Let's get into the ES futures. All right, and one thing that's really cool here is I love this. It just shows you the proof of concept. And when I was talking about using a chart and then going back and going, damn it, why didn't I just take my profits, on something, this will remind you. So last week, okay, this is a beautiful before and after, if you will. I say, hey, it looks like we may get that flush low and a rounding bottom. If we go inside and up, which we did at this point, it was beautiful. I gave you a target and we went directly to that target and sold off. That's what was supposed to happen. So, my transparency, what I'm saying is, I had SPY calls, I made some money, and then I left it alone, and I should have just closed it because we hit here. Okay. Now, we went from an inside and up formation to an inside and down, and I have this down here that says target if we go inside and down. Notice around that 5564, we're at 5602. So, if we continue with a negative sentiment, it would not surprise me if we gap down 50 or 60 points. Okay. So 50 to 60 points would be right here at the zone that I gave you. And well, just like I'm saying, I should probably do something here if we were to get into here. So I might pull out my interactive broker tonight. And if we get there, I'll probably buy some SPX calls for overnight and try to, see if they work out. I'm not going to go like crazy and buy like a in the money delta or anything like that. Because, right now the sentiment's so bad, it's like it just want to be careful. So I'd rather trade small. Okay. But if we get there, then I'll do something. I do have future contracts on building a micros position for the long side. And again, if we get a relief bounce, then I'll trim. If we gap down, then I will probably add my last contract somewhere in this gray zone here. Okay. So that's my plan. Beautiful chart though, working very, very well. All right. Let's go over here to the daily. These are your numbers for triggers. Again, we don't just blindly trade these. There's a methodology that I teach in the room. And you know what that is if you're in the room. If you don't, you can come in the room and check out a trial for $7. I teach you how to do that. But yeah, I mean, this trigger worked really well. I'm going to keep that one there. And then I have one down here at the trendy mid edge where we could be looking to go long as well. And that's about 170 points down. This one is around that 555 level. So again, if we were to open up about 50 down, 40 to 50 to 60, somewhere in there, we could be looking to buy the dip. All right. And then 4 hour, no changes here. Here's your zone. This is a great reminder you know, the market was bearish. You want to be looking at going short here. Here is that, I mean, we're really coming in around those same levels. I'm finding, on multiple time frames, so there could be a nice little relief bounce here. Also, we are very extended from the cloud itself. And typically, when we have this kind of divergence, we'll see some sort of nice move back up. All right. So this could happen. That'd be really ugly. That would create this to come down a little bit more, and then looking for a bounce in here. Okay, let's go into the NASDAQ and take a look at that chart. We'll get over here to the weekly as well. And I can't make this up. Same thing I gave you last week. Worked perfect. We did go inside and up. Prices did hit the target that I was looking for. And this is interesting. Then we went inside and down. And if you traded this to the downside on Friday, you hit this target. So the NASDAQ already made it to both targets that I gave you. Okay. But the ES hasn't. So it'd be interesting to see what happens. It could be that the NASDAQ is my canary in the coal mine. If we bounce out of here, that would be a good sign because we're at a trendy edge. Here's that upper trendy edge on the NASDAQ. That's pretty wild, man. We're halfway to getting to the lower zone, and it all happened pretty close into March, kind of like what I was predicting. But unless we have a capitulation event, they just kind of keep slowly dropping this. It could be a long couple months, We'll see. All right. But we are at an area. So for my bulls out there, we are at an area where we could see a bounce tonight. Okay. Now, again, I haven't been on social media, haven't looked at the sentiment. I don't know if anything came out over the weekend that sounds bearish or bullish. That could have some sort of impact. Okay. Anyways, that's what I got on the NASDAQ. And then when we come over here, we have our triggers again. These are pretty low. And the reason why I did that, again, we could bounce right here, but these are pretty low. When we do dump on the NASDAQ, it tends to be a lot more volatile. So I'm trying to be safe and go a lot lower for that idea to get long. But it would be in this area. We have that nice little drop base rally out of here, right in this area where I'd be looking for some sort of bounce. Okay. Again, could bounce tonight right there. All right. All right. 4 hour. See what happened. See what happened. We closed here on Friday. We're in a zone. Another reason why we could see a bounce. Start to break down underneath that. Just go to your higher time frame and pay attention to these numbers over here. Okay. Last chart that I want to be looking at is going to be Bitcoin. All right. I just want to show you guys this real quick. All right. And show you what it looks like. So far on the quarterly, it is an inside quarter. I would imagine it's going to stay inside. And there's a possibility, just like the Qs and the SPY, that 9 EMA, we're still very stretched from it. So I do believe that Bitcoin, if it does not get up and over 100,000, let's just say 101, we are moving sideways to down, and my next buys would be in that 64 by 50 level. Okay, so that's for me. If you guys have any questions, let me know. Don't forget to give this a like. Please share with your friends and family. I hope it helps you. Sorry if I talked too much in this one, but I didn't get to see you guys on Friday. I missed you, and I'll see you tomorrow morning before the bell. Talk soon.